Welcome to the Pro Ticker Deep Dive. We are diving headfirst into a market that's been, the definitive future technology for decades. And the question today is, has that future finally arrived for investors? We're talking about quantum computing, of course, and all the sources surrounding the late 2025 IPO of Xanadu Quantum Technologies.
It really feels like a pivotal moment. I mean, you look at the raw numbers projections pegging the quantum industry at a jaw-dropping $500 billion by 2040.
Wow.
And then you see the first pure-play quantum hardware firm go public. You have to wonder if we're standing at ground zero for a quantum tech gold rush.
That $500 billion number, it definitely demands attention, but it also demands a lot of skepticism. So our mission here is to unpack these sources. Why now? Is Xanadu the company that cracks the code on commercialization?
Yeah.
And really, what are investors buying when they put capital into tech that still feels, closer to a lab experiment than a utility?
Well, the hook is undeniable. The potential impact here is just immense. We're not talking about a slightly faster iPhone. We're talking about a complete rewiring of what's possible. Imagine discovering new drugs in silico, just simulating molecules perfectly, or creating truly unbreakable cryptographic security.
Or, on the flip side, breaking all the encryption we currently rely on.
Exactly. And the sources all point to this being an inflection point. After years of these slow, incremental R&D breakthroughs, the hardware wars are finally moving to the public stage.
Which means you're combining that bold science and aggressive execution with the massive capital you can only get from public markets.
Right. And before we get into the investment side, we really have to establish the paradigm shift here. Without understanding the underlying power, that valuation makes absolutely no sense.
Okay, let's unpack that. For anyone used to classical computers, we know it's all about bits. A definite 0 or a definite 1. How does a qubit change that whole engine?
A classical bit is, like you said, a light switch. It's either on or it's off. A qubit, leveraging quantum mechanics, is more like a dimmer switch. It can be 0, 1, or kind of any blend of both at the same time. That's superposition.
And the real power leap comes from how these qubits interact with each other.
Exactly. When you link them together through something called entanglement, the number of calculations you can do at once doesn't just add up. It multiplies exponentially. So for you, the listener, a machine with just 50 truly functional qubits could, in theory, analyze more scenarios at once than the most powerful supercomputer on the planet today.
And that translates directly into things that were just science fiction before. What are the prime examples that suddenly become, routine?
The two biggest areas are optimization and chemistry. Simulating complex molecules, for designing new drugs, new materials, better catalysts. That's basically impossible for classical machines.
But it becomes doable for quantum.
It becomes tractable, yeah. And the second is security. Certain algorithms, like Shor's algorithm, can theoretically break the public key cryptography we all use today.
So if quantum's been this theoretical powerhouse for so long, why is late 2025 the catalytic moment? Why are we seeing this huge flood of capital right now?
It's all about achieving commercial escape velocity. The engineering required to control these incredibly delicate quantum states has just matured enough to move out of the purely academic labs.
And into commercially viable systems, even if they're early ones.
Exactly. And this whole movement is being heavily fueled by global competition.
Right. The sources really highlight that global race. It's a race for a technological edge, but it's really a national security race, isn't it?
Oh, absolutely. The major players, the US, the EU, China, they're all pouring billions into quantum research. They see control over this as essential for future economic and military dominance. That geopolitical pressure is a huge accelerator for private investment.
That context is vital, but let's bring it back down to earth with the current market size. We hear that $500 billion number. What does the revenue picture actually look like today?
And that reality check is so important for a deep dive like this. The global market in 2025 is, it's pretty modest. It's sitting somewhere between $1.4 and $1.7 billion.
And that's mostly from grants and R&D partnerships, not selling actual products.
Correct. It's driven by early government grants, R&D deals, consulting. So investors are placing a bet on a trajectory, not a current industry leader.
And that trajectory is what justifies the hype.
Precisely. While we're starting small, the consensus estimates see the market ballooning to between, say, $90 and $170 billion by the early 2030s. Some bullish models even hit that $500 billion figure for the whole ecosystem by 2040. What's key is the geography. North America accounts for over 60% of the market share right now. This is where the capital is flowing.
Okay, so this is where it gets really interesting. Xanadu's specific bet, They just went public through a SPAC merger with Crane Harbor Acquisition Corp. The ticker is CHAC, valuing them at roughly $3.6 billion. That valuation alone tells you a story.
It's a very bold calculation, but their technology is what sets them apart from the giants. The Googles, the IBMs on and Q. Xanadu is the first pure-play photonic quantum computing firm to go public.
They're betting on light.
They're betting on light instead of matter.
We have to spend some time on this because that tech choice is the entire thesis for their valuation. When we say photonic systems using laser pulses, optical circuits, how is that different from, say, superconducting systems?
The contrast is dramatic, and it really gets at the two biggest pain points in quantum hardware today: cooling and connectivity. Superconducting and trapped ion systems typically need to be cooled to near absolute zero. We're talking millikelvin temperatures, colder than deep space, using these incredibly expensive, huge cryogenic refrigerators.
So the cooling apparatus is actually more complex than the machine itself.
Often, yeah, that's the engineering nightmare. But photonic systems, they do their work using light pulses traveling through optical circuits. And the huge benefit is the whole system can operate at room temperature.
Wow. Okay, that sounds like a complete game changer for scalability. If I don't need a cryostat the size of a car to house my chip, the physical footprint just shrinks immensely.
It changes the entire total cost of ownership, the TCO. Xanadu is basically arguing that by ditching deep cryogenics, they solve the hardest physical problem in scaling these computers.
And you could integrate them into data centers more easily.
Much more easily.
Oh.
And you can link them together modularly using standard fiber optics. This allows for horizontal scaling. You just string together lots of small processors. That's way simpler than trying to build one giant monolithic cryosystem.
Which makes Xanadu's 2025 deployment of their Aurora system a really critical milestone. What does Aurora actually look like?
The sources describe it as being totally modular, built for that scaling idea. It connects 4 server racks with 35 photonic chips, all linked by 13 kilometers of fiber optic.
Okay.
And that modular design lets them test how well the processing units connect to each other, which is obviously essential for building a large-scale system.
But the really crucial part is error correction, right? These quantum states are so fragile. What are they showing with Aurora?
This is vital. They are already benchmarking real-time error correction using photons. Every single competitor is struggling with this, maintaining the integrity of their calculations.
So if Aurora is showing early success there,
It suggests they might have a viable competitive path toward what's called fault-tolerant computing.
let's pivot to the ecosystem because the hardware is useless without software. A lot of the early money isn't in hardware sales, it's in software development.
That's right, and Xanadu has built immense leverage here through their open-source Penny Lane platform. The sources note that Penny Lane has been adopted by nearly half of the world's quantum algorithm researchers.
That's a massive strategic advantage.
It's a huge lever. If you control the dominant language or the OS, you drive demand for your own hardware.
It's a classic playbook.
Exactly. They're building the developer base now so that when utility-scale quantum finally arrives, all the expertise and algorithms are already optimized for a photonic architecture.
And they're not just in the R&D phase. What does their commercial traction look like right now, even with low revenues?
They've secured these early-stage partnerships, what they call commercial traction, with leaders in automotive, specialty chemicals, aerospace.
So big, serious industries.
Right. These aren't multi-billion-dollar contracts yet, but they show real-world engagement. They're applying early-stage quantum algorithms to real problems for big companies.
Which brings us back to the $3.6 billion question. If the current revenue is all grants and these early deals, what are investors actually valuing at that market cap?
They're buying a profound option on the future. The source material is very clear about this. This is not a valuation based on current quarterly earnings.
Not at all.
It's a bet on the architecture that will dominate the next 2 decades. It's like owning a piece of the Internet's core technology before the World Wide Web even launched. You're buying the right to participate in that potential $500 billion ecosystem.
So the valuation is basically a measure of how much you believe in that photonic TCO advantage. What does success look like if they actually hit that fault tolerance goal?
Success means they achieve cost, power, and scalability advantages that their major competitors just can't touch because they're all stuck with cryogenics. The $500 million they just got from the IPO is meant to accelerate that R&D and global client deployments.
It's about turning that theory into reality.
Turning the theoretical advantage into manufactured integrated hardware.
Okay, that's the upside. But this is where we have to get skeptical. This is a high-wire act with some formidable risks. What is the single most audacious and maybe most dangerous goal they've set?
The risk is purely technical, and the timeline is aggressive. Xanadu has a publicly stated goal of delivering a commercial, fault-tolerant quantum computer by 2029.
Fault tolerant, so stable and error corrected. What are the numbers behind that 2029 target that just show how immense this engineering challenge is?
They're aiming for a machine with 1,000 logical qubits. And logical qubits are the stable, useful ones you need for meaningful calculations. The catch is, to get 1,000 of those, you might need 100,000 physical qubits to handle all the error correction.
That 100-to-1 ratio, that's the great unknown. That's what separates a science experiment from a commercial utility. And they have to close that gap in 4 years.
Precisely. It is a monumental engineering hurdle that depends on scientific breakthroughs happening on a rigid corporate timeline. If they miss that 2029 goal, or even have a serious delay, it would severely test the patience of those investors who paid $3.6 billion for that promise.
And what about just the general timeline for this technology being useful?
Even the biggest bulls agree that the timeline to quantum advantage, that is, solving problems classical machines actually can't, is still uncertain. Mainstream utility-scale quantum computing is still several years away. So if you're investing, you have to factor in a long holding period and a lot of sensitivity to technical news.
And financially, we have to talk about the red flags with the SPAC structure itself.
Absolutely. The first red flag is just the nature of SPACs. They're known for volatility, especially right after the merger. Second, R&D costs in this sector are astronomical. They burn cash like crazy.
And the market isn't always kind to pre-revenue tech.
Not at all. Xanadu's revenues are heavily dependent on grants and partnerships, which are not stable, recurring income streams yet.
Okay, let's shift to the trading view. The nuts and bolts for the investor watching the ticker, CHAC on NASDAQ. All that investor interest is currently bottled up in that SPAC vehicle.
Right. And as is pretty typical with SPACs, the stock price through 2024 and 2025 has been remarkably calm. It's just hovered close to its net asset value, or NAV, which is in that $10 to $11 range.
And that NAV acts as a floor, basically.
It does, because investors can usually redeem their shares for that amount before the merger closes. So that low volatility, it signals caution. It's not excitement. Investors are treating it like a safe place to park capital before the real action starts.
Right, it's a holding pattern.
Exactly. The technical charts show clear support near that $10 NAV floor, and then resistance capping any speculation up near $11.50. The market is just waiting for the trigger.
So what's the expectation once that merger closes and Xanadu is officially trading under its own ticker?
We expect a huge break in that pattern, a big increase in volatility and volume. You'll see institutional money that was maybe hesitant to get into a blank check company now seeking exposure to this pure play quantum hardware company.
And that's when the stock stops trading based on the safe NAV floor.
And starts trading based on that projected $500 billion ceiling.
So this is the moment we synthesize it all. If we summarize the sources, what does Xanadu's public debut really mean for the whole industry?
I think this is quantum computing, transitioning from an academic curiosity to a capital market reality. For the commercial era of quantum, Xanadu's IPO and their whole photonic thesis, this might go down as the Netscape moment.
The opening bell that signals the start of a massive investment frenzy.
It could be, but that success is completely conditional. It rests entirely on their execution against that 2029 deadline.
Absolutely. It all comes down to scaling those modular machines, proving a real-world quantum advantage over supercomputers, and converting those early partnerships into huge enterprise customers.
And any setback in achieving fault tolerance will test investor patience and put that multi-billion-dollar valuation under a microscope.
So the opening bell has rung. It's giving both the deep tech optimists and the hard-nosed capitalists a concrete vehicle for their bets.
And that means the next 5 years will be the most consequential. They're going to decide not just who leads this quantum race, the superconducting firms, the trapped ion guys, or Xanadu's photonics, but crucially, how and when quantum disruption gets integrated into our daily lives, transforming everything from materials to finance. That timeline is the ultimate question we're left with.
See you all in the next Pro Ticker Deep Dive.